Welcome to Should I Buy It, the email edition. I'm Aaron Task here with David Peltier. David, great to see you as always.
My pleasure.
So we have the rebranded edition now of our email segment this week, and our first email comes from Patrick, who writes in, "Hi David, I'm a home gamer who enjoys hearing your perspective on stocks and was wondering what you thought about HomeX, which is a Mexican home builder. You know, it's a stock has been stuck in a range between 60 and 65. Does this mean all the good news is already baked into the stock, or are people wrongfully linked it to the slowing U.S. economy?"
I think it's business. It's just proof that business is better just about everywhere outside the U.S. than it is in the U.S. Wouldn't want to touch a U.S. home builder. Don't care what the numbers came in this morning. If there more starts, just means there's going to be more inventory out there.
The inventories
later.
they're through the roof here in the States. But Mexico's a different story.
I think Mexico's a different story. HomeX, they have the best margins in the business down there within their industry. The one thing that kind of worries me is, I believe it was earlier this week, one of the large insider owners of the company said he's going to be selling a big portion of his stock. Even though there was a Merrill Lynch upgrade this morning, sent the stock up, let it fall below 60, because if he floods the market with 1 million shares or a couple million shares.
Right. Would you be selling into this rally on the upgrade maybe?
Not necessarily. In fact, I think I actually want to own the stock, but I would want to see it pull back below 60 before I start buying.
Okay, well, let's stick with the international themes. Another email from Beth. What do you think of Kong, which is Kong Zhang, I believe it's pronounced, and there's probably mispronunciation, the wireless China play? Due to report on May 21st.
To me, it's more of a speculative name. It's just not my cup of tea, to be perfectly honest.
As a value guy, it's not your cup of tea.
Yeah, you know what? There's a lot of competition in this space. China's obviously a growing market, but it's not the horse I'd want to ride there.
Do you like any of the China online contingent, Sohus, Sina, Tom Online? Is that a place you'd want to be invested right here?
For the longer term, yes. But again, I think some of these names have already run quite a bit, and it's not necessarily something I want to be chasing into this environment where growth overall is slowing. And I think the appetite for growth and risk for investors will wane in toward the second half of the year.
Also, some of the Chinese officials are trying to tampen down some of the froth in the Chinese market, which could come back to bite you. All right, let's move back here to some U.S.-based companies. Here's a couple questions from Dave in Durham, North Carolina. Starbucks is getting crushed, and the only reason I can see is that investors doubt its ability to successfully implement their ambitious expansion. Am I missing any important news? Is this drop in price a sign I should sell or an opportunity to double down?
Ironically, they're going a lot in China too. I thought it was more of a tea drinking, but
they're trying to convince the Chinese to drink coffee,
and
right?
It's working. But again, Starbucks, kind of like the stock we talked about in a previous video today, Las Vegas Sands, the market just doesn't really have the appetite for companies with large multiples where the growth is kind of maturing. And so while Starbucks has come down considerably at 28, and I think it's starting to look kind of attractive, I think the market will let this stock come back to 25, 26 before it starts to find a bottom. So either let it come in a little bit or let the stock digest this price a little bit. It may have to move sideways for a couple more months before you can really buy it and expect to make money off of it.
Right, and I would just say, technically speaking, that's an ugly looking chart. We have a death cross with the 50-day coming below the 200-day, and after an event like that, you would want to wait to see if it's going to have some bounce. All right, so Dave's other question is about Seagate. Will it be affected by the move from disk-based to flash-based drives, and what stock will benefit the most from this move to flash?
This has been a long-term risk in the disk drive business for a while now, one that's really kind of failed to materialize. So again, if I'm a Seagate investor and I do like the stock, I think this remains one of the cheapest areas.
You've liked the drive since we started doing these segments.
Yes, yeah. And it's been a volatile group, and it's tradable. You know, it'll always be volatile. But I don't think that regular disk drives are going out of style. They're not going to be made obsolete anytime soon. Seagate has buyback and dividend support behind the stock. It's pretty cheap on an earnings basis, and it's a name I'd be buying here.
All right, David, thanks very much.
Thank you.
For David Peltier, I'm Aaron Task. Stay tuned for more of TheStreet.com TV.